If you've been watching the financial world lately, you've probably been holding your breath. Gold prices have been on a wild ride, recently touching levels that many thought were years away. We saw gold futures surge, and while they have pulled back a bit from their all-time high of nearly $5,600 earlier this year, they're still hovering in that strong $5,100 an ounce range. But while gold soars, silver's story is strangely different. Despite a massive rebound, its price seems capped, trading in a frustrating corridor between roughly $82 and $86 an ounce, unable to break free. But here's the thing. This isn't just random market noise, and it's definitely not a short-term blip you can blame on a single headline. What we're witnessing with gold is a fundamental realignment. But what's happening with silver is something else entirely, a story of suppression. So today, we're going to break down the real drivers pushing gold to historic levels, and then we're going to expose the graphene lie that's actively destroying silver its true price potential. First up, and maybe the most powerful driver for gold, is the historic gold rush by the world's central banks. For years, these institutions have been stockpiling gold. So why are they buying with such urgency, even with prices near record highs? The simple answer is fear. There's a nagging concern about the long-term stability of fiat currencies, especially the US dollar. Central banks are making a deliberate choice to diversify their reserves away from dollar-based assets. This isn't just a trade, it's a long-term strategic pivot. They're hedging against geopolitical chaos, stubborn inflation, and the risks that come with tying your nation's wealth to another country's fiscal policy. This trend looks like it still has years to run, meaning this foundational layer of demand for gold isn't going anywhere. And that brings us right to the second major driver for gold, de-dollarization. For decades, the US dollar has been the undisputed king of global finance, but its reign is, slowly but surely, being challenged. Countries are actively looking for ways to cut their reliance on the dollar for trade and as a reserve asset. This is a direct reaction to rising US debt and the weaponization of the dollar system through sanctions. Gold is the clear winner in this scenario. It's the only universally accepted neutral reserve asset on the planet. It has no counterparty risk and can't be printed into oblivion by a single country. As nations search for a safe harbor outside the dollar system, gold is the most obvious and trusted choice. This move from dollar assets to gold isn't a temporary fad. It's a structural change in the architecture of global finance, and it's giving gold a powerful, ongoing tailwind. So, what about silver? Its story should be even more compelling. On one hand, it gets a boost from the same forces lifting gold, acting as a safe haven asset. But here's the twist. Unlike gold, more than half of all silver demand comes from industry. This should be giving it a second powerful engine for growth. Silver is absolutely essential for some of the world's fastest growing technologies. It's critical for making solar panels, and its role in electric vehicles is growing fast. Each EV uses a significant amount of silver, around 20 to 50 grams. As the world barrels ahead with the green energy transition, the industrial appetite for silver should be sending prices to the moon, but it isn't. Why? Because of the graphene lie. There's a narrative being pushed that graphene is a viable, cheaper alternative that will soon replace silver. This lie is destroying silver prices. It creates fear and uncertainty, causing investors to hesitate and manufacturers to delay purchases, all based on a replacement that is nowhere near ready for mass adoption. This isn't just a natural search for alternatives, it feels like a targeted campaign to suppress the price of an asset with explosive fundamentals. The forces driving gold are powerful, but the forces suppressing silver are deceptive. Understanding the difference is no longer optional if you're a serious investor. If you want to see past the lies and stay ahead of the real market-moving trends, driven by a historic pivot from central banks and a structural move away from the US dollar. But what we're seeing in silver is suppression. Its price is being held hostage by the graphene lie, a false narrative that's intentionally kneecapping an asset just as its industrial demand is set to explode. Investors are coming back to gold, realizing its strength is here to stay. But the real story is silver, an asset fighting to break free from a lie that is keeping it from its true potential. Its struggle shows that the foundations of the financial world are not just shifting, they're being manipulated. Thanks for watching.